to TradeSpoon. My name is Vlad Karpel. I'm CEO and founder of TradeSpoon, and today I'd like to go over market brief and feature of trade. Before we get into the details, please take a look at the disclosures. Trading stock and options involve risk and are not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own portfolio based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, it should not be assumed that the future trade picks will be profitable or will equal past performance, and you can see the relationship between TradeSpoon and Trading Block on the bottom of your screen. All right, let's take a look at the market. Market has been volatile. It's up close to 2% on the news that there will be a delay on some of the items that United States imports from China, cell phones, some of the computers. So that created a rally in the market. We are right at the 50-day moving average, around 294. So before the FOMC decision, the model runs at 6 p.m. Central. This is the model that makes Stock Forecast Toolbox makes predictions for the next 10 days. So for the next 10 days, market bias is negative. I think as long as the market trades below 50-day moving average, there's still a negative bias in the market. However, with the just recent news that came out a few minutes ago, bulls short-term are in control, right? And the market and the stock, you can see, is a lot higher than the predicted high the model has foreseen. But going into the next 10 days, the trend is still negative. So I would wait for the confirmation, at least for next couple of days, and see if the market can make higher highs and higher lows above 50-day moving average. That would be a confirmation that bulls are in control. Up until now, I think it's a 50-50 chance where the market is going to go next. So you do need some empirical data to confirm whether the market will be broken. I think as long as the market stays below 50-day moving average, right now bears short-term are winning. Now we're looking at the seasonal chart. It runs on Sunday, 6 p.m. This model makes predictions for the next 50 days. So the model before was optimized for 10 days. This is going into the 50 days, and pretty strong move on Sunday. Pretty strong signal for a higher 80% chance, basically saying in the next 50 days, now we're looking into October, average price will be higher than last Sunday. We actually see an example of that. So short term, I think I would be bearish on the market as long as we stay below 50-day moving average. But long term, now going into the October, I think this is the bottoming process where the sell-off, I don't think it's over, but I think that we are building the bottom, and the market will potentially rebound. So 80% chance that it will rebound by end of October. I'm looking at the bar chart data. This is This is the S&P mini September contract. We're seeing we were as low as 28.60 pre-market during European session. Now we're at 29.45, right at the 50-day moving average. So we're seeing we've been trading for the past 7 days below 50-day moving average. So that's bearish for the market. There is no sign of capitulation so far. So I think we will retest June lows. A lot of it, of course, depends on the Fed decision and on the rhetoric from the China-U.S. negotiations. But purely from technical point of view, as long as we trade below 50-day moving average, then there is a high likelihood that the stock market will retrace to the May low. What drives the market? Core CPI retail sales this week, Walmart, Nvidia, Applied Materials, but more importantly, the tariffs. If there's delay in the tariffs from September to December, and not all of the items will be taxed at 10%, that is the positive momentum for the bulls. How do you trade in current market condition? I'm going back to August 5th. This is the monthly trader model based on the seasonal chart, makes prediction for the next 50 days, holding time usually 5 to 20 days. On August 5th, we recommended ACN. You can see on August 5th, if you enter ACN at 189.91, right now it's trading at 191.52. Well, it's trading as high as 194. So you can see a $4, 2% move, 1.5% move in short period of time trading the ACN based on our model. Not only do we provide signals, we actually trade them in the live trading room. We have live trading room every morning, morning bell and a closing bell. These are the examples of the hedges. So as the market being volatile, we were doing put spreads. 300 to 95 put spread is one of the example. Bought at 247, closed at the 325, 380, bought it again today, full disclosure, still on long position right now, trading around 275 to 80. So that's some of the trades from our live trading room. You can find all of the live trading room performance here. We've been averaging above 75% accuracy. Trade for today, I'm going to go with VXX. VIX dropped 6%, VXX is down. I don't think that volatility will go back to 12. I think VIX is going to continue going higher and stay in above 20 on a day like today, where we right at the 50-day moving average. I think there's higher chance that the market will retrace to 80 level and it will reach 300 level. So that's why I'm recommending buying VXX. Strong signal from our model, continuous positive momentum. And finally, we have every other Tuesday. Next event is on August 20th. We're going to talk about how to pinpoint entry and exit of your position using our models. I hope you guys can join us. It will be Dan Cook from Nadex and myself, and that conference is at 12 o'clock on Tuesday, August 20th. Thank you very much and have a great day.